India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Wednesday morning, and it's still all about President Trump and what he's doing and what he's going to do. Markets yesterday had a very, very painful session, so that's also going to be the focus, whether there is more downside or whether we should actually find some stability around where we closed. I'm Prashant. With me, my colleagues Surbi and Nigel. Guys, hi, good morning.
Hi, morning Prashant, morning Nigel.
Morning.
I realize we are rather black, dull, grey and glum, all of us today. Thank heavens for the pink, little bit of pink that Nigel's sporting.
Well, that's right, and in fact, in the near term, I think things could be a little bit tricky, but just want to show all investors out there that in the longer term, these sort of scenarios have proved to be the best phase to get into good quality names. So hang in there. The near term's tricky, but the longer term for India should look good.
Well, absolutely. And, we'll just sort of take it step by step with what you need to know as we begin the fresh news trading session. Now, I'll get to price action in just a bit, but the news is essentially what I think will dominate more than anything else. So yesterday, same time, we were talking about how we've not heard anything with regards to tariffs on China, etc. Well, we've heard something now, and we'll play out those sound bites as well in a bit from now. So Trump has essentially said that he's weighing 10% tariffs on China over fentanyl flow in his latest comments. So this is this happened post-market hours, post-US session last night. And I think he did say, although he didn't specifically mention 1st Feb for China, but he did throw in that 1st Feb line. And of course, for Canada and Mexico as well, that deadline is the 1st of February. Now, that's one. Remember that USD, the dollar CNY, has popped up a little bit, about 0.25% or so in response to this. Now, this is over the last 3 hours or so that we've seen this. There was also one more announcement, and this happened in that press conference. Trump has announced a major infrastructure plan and investments in AI infrastructure as well. We have that big number of $500 billion worth of investments into AI infrastructure. He was standing in that room next to Sam Altman of OpenAI, Larry Ellison of Oracle, and Masa of SoftBank. And he said, well, we're going to sort of start this new venture, big investments. The intricacies, the detail, etc., we don't know. But we know, and remember, the AI-sensitive stocks did pop up and close higher last night. So it's, the focus very much seems to be on building out and helping America in two areas, which is infrastructure and AI infrastructure as well. Now, I'll come to price action. U.S. equities did well. The S&P was up about 0.8%. The NASDAQ was up about 0.65%. So decent close. The 10-year yield, it was off about 6 basis points. We left up at about 4.56%. The dollar index at about 108.15. Remember, we were at 109.5 or so just about a week ago. 109.3 or so, 355. In that vicinity, we're at close to 108 rather compared to 109 now. Oil prices also about 1% lower, just under $80, $79.5 per barrel is where we finally left off at. Now, that's a global setup. Are there any big takeaways from what happened last night in the US and that we can apply here in India? Well, actually, I didn't think yesterday morning that there was anything big out of what Trump did or said after inauguration. So the market here was still in a wait-and-watch mode. But guess what? The market was not in a wait-and-watch mode, and it kind of sold off very aggressively. I don't think Trump or what he said, at least till day before yesterday, is to be blamed for the sell-off. It's got to be maybe something more or a combination of, the same kind of factors. But yesterday was painful, about 1.33% lower on the Nifty, as you can see. Where does it leave us? We broke Monday's low of 23,047. The close yesterday was 23,024. So that's the first let's see if we are able to stabilize around these levels, which is last Monday's low and where we left off yesterday. The support comes in at 22,500 below. If you continue to break, then the support comes in at about 22,500, 22,800 in that zone. If you go back, there are many highs around these levels in this 300-point band that we've seen. So that kind of becomes a support zone. Resistance, of course, every time you break lower, the previous high becomes a bit of a resistance. And yesterday's high was 23,426 on the way higher. Again, these are very, very near-term kind of levels we are looking at. On the Nifty Bank, something similar here as well. So the resistance is yesterday's high, 49,650. And downside level to watch is 47,898. That is nothing but last week's low. And below that, you look at the daily Bollinger Band, which is 47,700 for the Nifty Bank. So these are just some levels to work with. I mean, the gut feel is that we should probably stabilize a little bit. Is this related, what we saw yesterday, especially related to, I mean, for the lack of anything more imaginative, something to do with the budget? It's tough to say. I mean, is this fears once again, every time you get close to the budget, at least for the last couple of years, you've started about fears about capital gains tax and this and that, etc. But, there's no way really to tell. So, I mean, I would kind of sort of square it off, at least what we saw yesterday, to a combination of what we've had, which is essentially, FPI selling for whatever reasons, a combination of reasons, and of course, locally, a bit of a cyclical slowdown that we are in. This morning, GIFT Nifty is indicating about a 67, 70 odd point higher start, and I hope that around these levels, which is around the Monday's low, the market starts to find its footing, even if it doesn't do anything spectacular or sharp on the upside. Surabhi.
Absolutely. And, there is some of that reaction in markets that's now playing out across China, for instance, because the tariff talk has begun and right now it's only at 10%. But the market is taking note of that because if you see Asia, the rest of the region is fine. Actually, the Japanese market's doing very well. There's a gain of about 1%. But look at the Hong Kong declines there about 1.5%. If you look at the mainland Chinese market, again, it's down about 1% or so. Taiwan's actually doing very, very, very well. Whether they're seeing it as China's loss, Taiwan's gain, anyone's guess. But the fact is that these tariff announcements, as they come through, it has started showing up in stock prices. Just to add to this whole news around Stargate, which is what that entity is being called, this big AI entity that Donald Trump is putting together. This obviously is a partnership between OpenAI, SoftBank and Oracle. And the initial announcement is $500 billion over a course of 4 years. First, they put in $100 billion and then they scale it up to $500 billion. What did Mr. Trump say as that announcement was being made? I just want to put that quote up as well. It's the same sentiment, right? He says that what we want to do is we want to keep it in this country. This is with respect to, of course, AI. And he did make a reference to China, saying China is a major competitor. So, these things are being watched very, very carefully by the market as well. And what he eventually does on China is the bigger question. And we'll only get the answers maybe the next couple of weeks. Anyway, to talk about our performance here, the fact is that India was singled out as a rank underperformer yesterday. This decline that we saw yesterday, it wasn't a global decline. Global markets were actually quite happy with the whole inauguration out of the way, but we were just falling under our own weight. On the FPI selling now, by the way, I mean, despite that fall, yes, we've managed to hold on to last week's low. Whether the bulls can still protect that, that's going to be the bigger question. On the FPI selling, again, this massive number that we've got yesterday, almost 6,000 crores of selling. It's taken the overall tally of FPI selling for January to over 50,000 crores of selling. Remember, the previous peak has been around 92,000, which we saw in November, and December was slightly better. Again now, so far in this month, we are above 51,000, almost touching 52,000 crores of selling from the FPIs. Domestic institutions obviously were buyers to some extent, offsetting that pressure. Lots of results are going to be in focus, and big index companies, can any of them come and provide some silver lining or not? On lever, the poll that Mangalam did is showing a very anemic volume growth, 1 to 2%, very anemic top line growth, 2 to 3% is what we're talking about. Plus, of course, we know that there is some pressure building up on the raw material side. So lever is not supposed to light up the charts. Talk about some of the other names. Pidilite actually could be a lot better. Again, I'm looking at the poll that Mangalam's done. 8 to 9% volume growth is what we're going with on Pidilite. There are a couple of tech companies that will be reporting as well. Mid-cap tech companies, Persistent and Zensar. And I just want to add a word on HDFC Bank. Can HDFC Bank come out and do something that will spark the mood? Not sure, because we've got the quarterly update, which was again showing that this growth in deposits is happening, but the loan growth has been very weak, just 3% this quarter. So not sure if HDFC Bank can come out with a stellar move like Kotak did. But I guess, Nigel, we hold on to hope. What about you, and what are you tracking in terms of the internals, the F&O data and all of that?
Well, yesterday was a very weak trading session, right? No two ways about that. But I think the message that came out yesterday was the markets now, they're looking more at value in comparison to growth. And everything is not fair at any price. You want to buy stocks at a good price. That was the message that we got out yesterday. Well, overnight, you have the top three indicators that we have. Well, they are fairly, positive in today's trading session as well. You have the dollar index is a little bit flattish. The yields have cooled off a little bit. And Brent crude prices as well are lower. So that's no worries on that front. In addition to that, the US markets ended in the green. The question is, yesterday's fall, did it have something to do with the weekly expiry-related factor on the sensex? Or was it that now, in fact, the markets want to take another leg down? We'll know that answer either today or tomorrow because, in fact, normally an expiry-related move does see a bit of a reversal. But the crucial support levels have been broken so that's what's opening up, and that's the fear with regard to the downside. So we'll have to keep an eye out on that. What did the FIs do yesterday? Well, they not only sold in the cash market, they added more shorts on index futures, close to around 5 shorts for every one long position. And after a while, actually, they added more shorts on stock futures as well, and they unwound some long positions. And that's what put additional pressure on the markets as well. Because remember, the FIs have been net long on stock futures, but in yesterday's trading session, the total swing factor is close to around 7% on that base out there. So the long positioning on stock futures has come down by close to around 7% in trade yesterday. What about the FI net shorts? Well, they were net short around 2.9 lakh contracts. We were saying, well, that's extreme. Guess what? In the last 1 week, those short positions have gone up by close to around 20%. And now it's around 3.5 lakh contracts on the short side, similar to what we saw on the election verdict day, that's June 4th itself. One would say it's extreme, but for the time being, it doesn't appear that they want to let go of those shorts because in long positioning has come down to around 17%. In the past, we've even seen it come down to around 10%. From there, we saw a big bounce out there. But for the time being, that's how they're positioned. The PCR, that as well is moving to the lower end of the band. Remember, it went to around 1.1, 1.2 a few sessions ago. That's come down to around 0.77 because we're seeing aggressive call writing and some unwinding of puts as well. And that's the reason why the PCR has come down. Normally, if you have the FIs net short, you have the PCR at the lower end of the band, that calls for a bit of a short covering bounce, so to call it. But as of now, the crucial levels have got broken. And the structure seems to be more on the downside than on the upside, which is causing the bulls to worry a little bit. The crucial levels come up for you on the screen. The 22,800 level on the Nifty, that's very, very important. 22,800, 23,000. You don't want that level to break out. Otherwise, in fact, we could see a breakdown to any levels, 22,200, 22,300, and then, in fact, maybe the lows that we saw last time. And you'll want the Nifty to go ahead and build on to that 50, 60 point positive start that we're seeing. The first level of resistance is 23,200. So a bit tricky in the near term, but for longer term investors, a lot of stocks have come to those levels that you want to get in.
Well,
okay.
Absolutely. And interesting numbers, interesting data. Nimesh also yesterday, and we'll sort of have that link back up. Talking about just simple, Nifty 50 and Nifty Next 50, looking at 5-year average valuations and where stocks are now after the 25 to 30% falls. And, that was, again, sort of something we'll readdress this morning. But just to sort of tie in the global stuff, right? This is Trump's latest comments on considering a 10% tariff on China that could come into effect on the 1st of Feb. Listen in.
We're talking about a tariff of 10% on China based on the fact that they're sending fentanyl to Mexico and Canada. Probably February 1st is the date we're looking at. For Mexico and China, we're talking about approximately 25%.
Okay, so the tariffs are coming, and let's see how the markets digest them. He was also, of course, talking about Stargate, this mega joint venture that's been announced between Oracle, OpenAI and SoftBank, which is going to be investing $500 billion in artificial intelligence. Take a look at the US president addressing that.
To announce the largest AI infrastructure project by far in history, and it's all taking place right here in America. In together, that's a massive group of talent and money. Together, these world-leading technology giants are announcing the formation of Stargate. So put that name down in your books, because I think you're going to hear a lot about it in the future. A new American company that will invest $500 billion at least in AI infrastructure in the United States and very, very quickly, moving very rapidly, creating over 100,000 American jobs almost immediately.
Okay, all right, Stargate. Arvind Sanger is with us, Managing Partner at Geosphere Capital Management. Arvind, good to have you with us here. Prashant this side, thank you for joining us. Global stuff we'll talk and your first reactions there in terms of what we've heard so far. But here in India, there's no... what do you think is the dominant driver? Is it just the cyclical slowdown, earnings slowdown, etc., which is at play? Growth stocks getting smashed, Dixon, Zomato, etc., big corrections yesterday. Or do you think there's some, fears around the budget and taxes, etc. now? Budget's not very far away. Go on.
I think it's a slowdown, and I think it's valuation. You put your finger on two of the most important things. We've been talking about this for several months now on your channel that things were not inexpensive and economy was slowing down. But what is now happening is that the big hits that the companies are taking are starting to move them into interesting ranges. But now, like you said, we have the budget to look forward to or to worry about, depending on your point of view. For us, usually budgets are non-events, but I think in a world where competition for capital is going to get more acute, if the U.S. is more aggressively, trying to attract capital and make, investment in the U.S. more attractive, both from a tax and regulatory standpoint and from other ways that the government can support it, then it behooves a country like India, which wants to be in that China plus one investment boom, to think about how it can compete for capital and, talking about raising capital gains taxes and other things. Unfortunately, that stuff will have to go off the table, and pro-growth ideas will have to come to the forefront to compete for capital on a global basis.
Okay. By the way, I just want to, talk about some of the quotes that came in from President Trump on immigration, and they were actually quite supportive. So let's see if IT stocks react to this or not. He said, when he was asked about H-1B visas and immigration, he said, and I quote, I don't want to stop, and I'm not just talking about engineers, I'm talking about people at all levels. We want competent people coming into our country. So very encouraging statements there that IT companies would definitely want to hold on to. Arvind, hi. So, as a money manager, when you look at the world around you, you have this Make America Great Again sort of endeavor that's taken off. And as of now, the U.S. market's in a roaring mood. So as a dispassionate money manager, do you think the money for the time being in the short term will continue to head to U.S. shores, given our concerns here and some of them you highlighted?
I think U.S. is a safe place in town, but as a value investor, I think the U.S. is getting a little bit overdone in terms of the hype and the short-term expectations. I'm not saying that if you take a 2-3 year views, U.S. growth will not be there, but I think a lot of the good news is discounted. So when I look at it globally, we find more interesting opportunities in some of the left-behind, left-out sectors. And India was not part of that left out, but is starting to get to where it's moving into more attractive, reasonable valuations. There's some of the high flyers, you mentioned a couple just now, Zomato and Dixon getting smashed. But again, I'm not suggesting those companies have suddenly become value stocks. But if we get a little bit more of a pullback here, the growth opportunities for some of these companies versus the P/E ratios is getting into a range where they start to get more interesting. So I think India is starting to move into the interesting range. US is starting to get to where maybe it's time to take a little bit of a breather since a lot of good news is being discounted.
All right. Hi, Arvind. Good to hear your thoughts. Arvind, I wanted to ask you about what about the Chinese market? Because there is this fear that Trump won't be as harsh as one would have thought on China. For example, today he's talking about tariffs of close to 10%, but earlier he was talking about 50-60%. Do you think there's a risk that China at these valuations in comparison to an emerging market like India could outperform from here on? Or do you think India is a longer term story? Well, we'll continue to see a decent amount of the flows as well as interest.
Well, China's problem is not Trump tariffs. China's problem is its own demographics, its own youth unemployment, its own bust of real estate. There are so many problems that China has. In fact, there was an expectation that if Trump puts on more severe tariffs, that China might undertake a much more meaningful stimulus. So if Trump doesn't undertake too much of tariffs, then maybe the stimulus is not going to be that large. So I'm not sure if China is not in a lose-lose situation, which doesn't mean that the market is not cheap and it could have a rebound. But like you just said, I don't think there's a structural story in China with or without Trump tariffs that makes us particularly excited for the medium to long term, given their challenges. India has a much more fundamental long-term growth story, but short term, India has underperformed China for the simple reason that India's valuations got too excessive and China's got cheap. So if you look at the last few months, maybe you could make that case. But going forward, I think China may have a trade, but not a fundamental bet that we are willing to make.
Super.
Arvind, you began by saying we've gotten to a place where things are better, but there's the budget to deal with. So in a way, you're saying that time to look for ideas, things. I mean, event, no event. I mean, the budget is there, but I mean, beyond that, you think time to be a little constructive here?
Yes, as long as the budget doesn't do any harm. And my main point about budgets in India is, don't do harm. And I think the government has done a reasonably good job of not making any big moves in budgets, which is what we like. So I think, we are always looking at companies bottom up in different sectors. And I think, some of the names we've talked about and others, things are starting to get to interesting levels. I won't say that we're jumping in with both feet, but we've started to nibble. And as the valuations come down, we're getting more attractive. We've been sitting on cash for a while, and that's being deployed in Indian markets as we see this pullback.
Got it, Arvind. Well, let's see. I mean, the last time around, they announced a hike in capital gains tax. It doesn't get, bigger than that. And yet the market could digest it and move ahead in life. So let's see. Hopefully no more surprises. That was a bull market. That was a bull market, yes. Right now, the market cycle is very, very different. It could use some support and some help, and let's see if that comes on the 1st of February. Thank you very much for joining in. Good conversation, as always. Well, let's also get you the latest from the sidelines of the World Economic Forum in Davos. Shireen caught up with Raghuram Rajan, former RBI governor, and spoke to him about the recent statements that have been made by the U.S. president. He also spoke about inflation trends in the U.S. and expectations of a rate cut by the U.S. Federal Reserve.
I think, for example, on the trade front, I was pleasantly surprised that they didn't impose tariffs right off the bat, which seems, suggestive that they will be a little more considerate about it. But
calibrating what rate they should impose?
Calibrating what rate and doing less damage, more from the U.S. perspective than from the other countries' perspective. But I think the announcement of External Revenue Service implies what I thought earlier, that he is serious about tariffs, both from the perspective of raising revenues for the U.S. so that he can cut taxes more, which he needs to. Also from the perspective that he really believes by putting tariffs on others, he can bring jobs back to the U.S. I'm skeptical that he'll raise much revenue. I'm skeptical that too many jobs will come back to the U.S. because manufacturing has gotten so automated that, it's not going to happen in a big way. The hope was inflation would come down of its own accord. That would be the soft landing part. But it's stabilizing. Of course, people can read the leaves and see, well, housing is coming down. Maybe that'll bring things down. I think there is no reason to be comfortable that inflation is coming down on its own. And if the labor markets aren't, showing signs of slack and maybe may tighten up if there are these actions against immigrants, I think the Fed has its job cut out, which means it's going to stay higher for longer. So I would not be optimistic at this point. Yes, you may see a cut, but I think right now the Fed wants to wait and see what are the policies that are going to come in and how much is its job going to be done for it by the, ebb of the economy and how much will it have to react more.
All right, well, time to slip into a snappy break. You come back, we'll go stock specific. Our top 10 stocks will be waiting for you on the other side. For the time being, I run you through the list. KEI, PNB Housing, Jana Small Finance, we have Carbon Indium Universal. They'll be reacting to positive news flow, while we have 6 stocks that will be reacting to negative news flow. They include Tata Technologies, Dalmia Bharat, India Cements, Cyan DLM, IndiaMART, and ICICI Prudential. Well, we'll slip into that break, come back, get into further detail on all of these names.
Welcome back. So the picture across Asia is mixed, with the Chinese markets, Hong Kong and China, under a little bit of pressure, but other markets are doing really well. And the gift nifty in the implied open seem to be suggesting that we'll pick up on the green side, given the sell-off that some would perhaps say got a little excessive yesterday. So hoping for some recovery, at least at the start. Now, what about individual stocks? As always, we have our team standing by with the CNBC-TV18 list of top stocks to watch. Guys, hi, morning to all of you. Lots of earnings to go over. Rima, let's start off with Tata Technologies.
Well, it's a decent set by Tata Technology. The company's reported a constant currency revenue growth of 1.7%. Margins have dipped slightly on a sequential basis on account of wages, but profits have managed to inch up by nearly 7%. Here, the only concern analysts have is the valuations of the stock. So Citi says valuations at 40 times FY26 is expensive, so they've got a sell rating. JP Morgan says that if you want to play the auto ER&D space, then they prefer to play it via KPIT Tech, because both KPIT Tech and Tata Tech both are trading at 40 times forward multiple, but KPIT Tech is offering you a higher growth. So therefore, they've got an underweight rating on Tata Tech. That said, the stock has been an underperformer. Its all-time high was 1700, but just in the last 1 year itself, the stock is down close to about 30%.
Okay, all right, Rima, thanks a lot for that. Well, I'm looking at Dalmia Bharat as well as India Cements, and both those numbers look quite weak. Now, for Dalmia Bharat, they're focusing on price rather than volumes. That seems to have hurt them. So on the volume aspect for the past quarter, well, it was a bit of a miss because we were estimating a growth of around 5-6% or thereabouts in terms of volumes, but that's come down by close to around 1.5%. And that's the key reason that there is a miss. So on the top line, there's a mild miss. Realizations went up by around 3% quarter on quarter. That's the lone positive actually in these numbers. Otherwise, input costs were higher than expected. Volume growth was lower than expected. Keep in mind, in the base year, they had that tolling agreement with JP. So X of that, actually, they grew by close to around 4%. But that's still lower than what the street was working with. So these numbers go down as disappointing. The EBITDA per ton improvement is just 115 rupees. The street would have liked to see a number of around 150 to at least 200 rupees. So that as well is disappointing. And the debt has gone up because of the expansion plan. What supports the stock will be valuations, but that's always been the case. So we'll wait by to hear in from the management. But these numbers go down as a bit of a disappointment. The good news is commentary for the next quarter. The management says things are looking up. So kicking the can down the road, we could see some bit of recovery intraday. On India Cements, well, now it's part of Ultratech because they've become a subsidiary from 24th of December. So watch out when Ultratech comes out with a set of numbers for around 6-7 days. They'll be accounting for India Cements numbers as well. Numbers disappointing. Top line degrowth of 15%. EBITDA loss out there. Power and fuel costs going up when you're not growing too much. And transport as well is higher when we're talking about input costs that are cooling off. You'll see, well, the profit number is good. That's because of an exceptional item. What's good for them is now they're under the fold of Ultratech Cement, and the debt number has come down to around 880 crores, which is a sharp reduction. But the numbers go down as a disappointing set of numbers. All
right, so keep an eye out on those names. KEI Industries is another one which reported earnings, and we had signed DLM as well. Upasana is here with both those. Upasana, morning.
Good morning. First up, let me start with KEI Industries. The company has reported overall a mixed quarter. Revenue was a beat, PAT in line, while margins were lower than the street estimates of 10% on a YoY basis. Now coming to revenue first, it stood at 2,467 crores with an uptick of 20%, and this revenue growth was mainly led by company's key segment, that is its cables and wires segment, which reported a revenue growth of 26%, while margins dipped by 50 basis points at 10.1%. Now coming to overall margins of the company, it stood at 9.7% with a downtick of 70 basis points on a YoY basis. And lastly, PAT stood at 165 crore with an uptick of 10% on a YoY basis, which was, as highlighted earlier, in line with the street estimates. Now coming to sign DLM, the company reported a strong revenue growth, but margins and PAT were impacted due to higher employee costs, other expenses, and even a steep fall in the fall income. So operationally, numbers look quite weak. Revenue saw an uptick of 38% on a YoY basis. EBITDA margin saw a downtick of as high as 290 basis points at 6.3%. PAT saw a downtick of 40%, clearly a sharp degrowth, and order book stood at 2,143 crores. So overall, signed DLM has reported a weak set of numbers.
Yeah, that doesn't look too good, Upasana. Got it. Thank you very much. By the way, we will be connecting with the management of KEI Industries shortly. We'll be in conversation with Mr. Gupta at around 9:30 a.m. Find out what the business trends are looking like for the rest of this year and, more importantly, FY26. All right, more numbers. Let's move on to the financials. Abhishek, how is it looking for PNB Housing and Jana SFB?
While PNB Housing reported a mixed set of numbers, what has worked for them is that the net interest margin and spreads are at 4-quarter high of 3.7% net interest margin and about 2.3% of spreads. Now, operating profits were down 0.9% sequentially. Their asset quality has improved 1.2% gross NPA ratio versus 1.27% in the previous quarter. Disbursements are weak, just growth of about 0.7% on a sequential basis. However, AUM growth has been helped given the fact that it's grown by 12% YOY and about 2.8% sequentially. In that, the loan growth has grown at about the highest in 3 quarters sequentially by 3.5%. Jana SFB asset quality has seen some pain with respect to slippages. Management has guided the worst is behind. So slippages are high at about 437 crore versus 412 crore in the previous quarter. The annualized slippage ratio continued to remain elevated at about 6.25%. So they had a massive write-off of 109 crore, which actually held the asset quality this time around. It wasn't there in the previous quarter. Management does say that the worst is behind with respect to asset quality. AUM growth is healthy at about 18.5% YOY and 6% sequentially. The net interest margin has come down to 7.6% versus 7.9% in the same quarter last year and about 7.7% in the previous quarter. And thanks to write-off, the gross NPA ratio has improved to 2.8% versus 2.97% in the previous quarter. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, we'll connect with the management of PNB Housing Finance at 9:40 a.m. later today. Well, let's hop across to Rima. She's here to tell us about IndiaMART. Rima, disappointing?
Yes, disappointing because there's one key metric we always track. That is the quarterly paid subscribers. It's been dwindling. Many years back, it was about 5,000 to 6,000 every quarter in terms of an addition. Then it trickled down to about 1,500 to 2,000. But this quarter, the paid subscribers have actually fallen sequentially by 3,700, and this was a big negative surprise. So revenues were just up 1.9%. Margin defense was pretty good, 39%. Profits went down by 10%. But again, it's this paid subscriber decline which has disappointed the street. Nomura has downgraded the stock to a reduce. Motilal Oswal maintains a bullish call on the stock because of undemanding valuations. But it's a weak set of numbers from IndiaMART.
All right, Rima, thank you very much for that. Well, let's talk about Carborundum Universal next. Sudarshan is here to tell us why. So, good morning.
Morning, Prashant. So the news is related to Vent India because Vent India has been informed by both Carborundum Universal and Vent GmbH that Vent GmbH will be selling its entire 37.5% stake in Vent India. So both Carborundum Universal and Vent GmbH hold 37.5% stake each. And this sale will be held via secondary market. Now, as part of the agreement, Vent India will also acquire the trademark from Vent GmbH by paying around rupees 34 crore. Now, the another part of this news is that Vent GmbH is part of 3M India, and there is infringement case going on between Vent India and 3M. So, as part of the agreement, infringement case will also be resolved. So now, what's for the Carborundum Universal? So the positive part of for Carborundum Universal is it will have right of first refusal if company wants to acquire 37.5% stake that Vent GmbH wants to sell in Vent India. And the last part of the news is there is a JV between Carborundum Universal and Vent GmbH. This JV will be terminated once the stake of Vent GmbH slips below 10% in Vent India. So overall, it's looking positive for Carborundum Universal because it will have right of first refusal if it wants to acquire the stake.
Okay, all right, got it. Thanks very much for bringing us up to speed with that development, Sudarshan. Let's now go across to Vamakshi. Look at numbers for ICICI Prudential Life. Vamakshi, tell us more.
Well, good morning, Surabhi. The numbers look like a weak set. It's a miss on the VNB front. New business premium was up 53.5% at 6,441 crores. Total AP was up 27.8%, again in line with what the street was penciling in. But the VNB margins were a big disappointment. In fact, VNB margins also contracted on a year-on-year basis from 22.9% to 21.2%, and resultantly led to a miss on the VNB front as well. VNB was up nevertheless 18.6%. HSBC has gone ahead and maintained its buy rating, but it has cut its target price from 825 to 780 rupees per share. Morgan Stanley, who has an overweight, equal weight call on the counter with a target price of 695, says that they've gone ahead and trimmed their VNB forecast by almost 2% for FY25 and 27 following the miss on margins. Macquarie, on the other hand, has a neutral call target price of 725, and they say that the VNB growth has disappointed again. Higher ULIP, declining savings and higher costs have affected margins, and they see downside risk to FY25 VNB estimates. So overall, doesn't look like a good set for ICICI Pru.
Okay, Vamakshi, thanks a lot for that. Well, here's a quick recap of all the top stocks we discussed. Stocks with positive news flow, they include KEI, PNB Housing, Jana Small Finance, and Carbon Universal. While stocks with negative news flow include Tata Technologies, Dalmia Bharat, India Cements, Cyan DLM, IndiaMART, and ICICI Pru Life. That's about all the stocks that we're looking at, but Manisha Gupta joins us to give us a roundup of all the action we're getting in from the commodity markets. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, even as other commodities are trading slightly jittery, it is the gold and silver prices which have gained up as a safe haven. Gold, by the way, is trading at an 11-week high, is now above $27.50 an ounce. Well, there's hedge buying, there's uncertainty on U.S. policies that really seems to be supportive. Coming to the crude oil prices, and yet another night where we've seen a decline continuing. We're trading at 79 for the Brent now, so have broken below $80 as the U.S. President Trump reiterates his consideration of a 10% tariff on China, which is a top oil consumer. This has amplified trade war concerns, and the markets are now also looking at potential hefty levies on Canada and Mexico as well. Markets also are looking at assessing implications of Trump's pledges to boost oil production by declaring a national emergency in sense of energy. So there's lots happening in crude, and we have seen more price declines than gains. Same is the case with the metal prices also. 1 to 1.5% of decline across metals, whether it's copper, aluminum, zinc, all of that trading on a weaker side, anticipating further steps coming in from U.S.
Okay, all right, got that. Thanks, Manisha, for the update over there. We do have to take a quick break, but when we come back, we'll touch base with Karan Taurani from Elara Capital to focus on, the quick commerce space. Back with that in just a bit.
Well, let's focus on the quick commerce stocks. Zomato yesterday slipped in trade as rising competition in the QSR space has pushed back margin expansion and also has driven faster network rollout. Swiggy was also dragged down. Now we're joined by Karan Taurani, Senior Vice President, Research Analyst, Media, Consumer, Discretionary and Internet at Elara Capital. Hi, Karan. Good morning and good to see you in. Karan, I think the header of your note was, they're making a pit stop in the longer lap. So what do you suggest? On Zomato, post that week showing and the kind of drubbing that we have seen, people were interested at 250, 270, 280, at 210, 220. Would you be a buyer?
Hi, Nigel. Good morning. I think I will definitely, like to buy Zomato at 200, 220 levels. I would recommend a buy rather. What we have seen right now is, a lot of exaggeration and overreaction, as far as quick commerce competitive intensity is concerned. We do have new players coming in, e-commerce will eventually get into quick commerce, but we don't see a price war for now. If there is a situation of a very sharp price war, wherein prices come off by 20%, 25%, discounting increases in a very big manner, then the losses can really magnify from here on. But as of now, e-commerce companies are not going to go into a price war. They are just trying to come into this segment because they don't want to miss out this opportunity and they want to make the most out of it. So, very clearly, quick commerce, e-commerce, both are going to coexist. There is nothing that, quick commerce will eat up into e-commerce in a very big manner. Of course, there are certain categories where they will end up, gaining market share, but there are certain categories which will only appeal to e-commerce. So very clearly, I think, it's obviously troublesome right now because of the increased number of players. You are seeing fragmentation, you are seeing competition, but doesn't seem to be so alarming as the share price is suggesting right now.
Karan, you've been optimistic on Zomato for a while and you've made that stance. I remember this conversation. We did this a couple of, months back or weeks back, exactly discussing the competitive landscape, and you're maintaining your stance. But, here's this, that Zomato press release openly coming out and saying and acknowledging the competitive intensity, even before the giants have come in. The, e-commerce giants like Amazon have announced an official entry. I think that's it kind of spooked the street to an extent, because you don't even have an official, big player coming in, and yet they're saying that the margin expansion has been put on hold. That tells us the existing players between Swiggy, Zomato, Zepto, etc., between them itself, without a major new disruptor, there is a lot of competition. So, just walk us through what makes you retain that optimism. And also the other factor why the stock sold off. One was the competitive intensity. The other factor why the stock sold off was the fact that they are front-loading all their, store rollout expenses, right? They're at, I think, 1,000 now. They're saying they'll be at 2,000 by December 25, which is obviously going to eat into profitability. So what is the window that you're giving for this to play out before they get back on the margin expansion trajectory?
So, Surabhi, in the near term, there could be, some kind of a minor price war, but, this is not a sustainable thing. Quick commerce business in terms of economics, you can't keep on burning money for 1 year, 2 year, and then, kind of sustain the business. Eventually, what will happen is that the players might move out of the market, players might kind of move out of this business rather, right? So I think quick commerce is a business wherein you can't really do steep discounting. It is a business in terms of user experience, great lead times, giving the customer the right product at the right time. Now, if you look at this situation right now of the players coming in, there are players like Zepto and IndiaMART who have got aggressive. They are doing steep discounting. This might sustain in the near term. This might put some pressure on Zomato in terms of profitability. But that is not the only reason why Zomato has delayed the plans for profitability. The bigger reason is higher throughput per store. So whatever new stores that they are opening in right now in the non-metro markets, in the new markets, they are not able to experience high throughput. That's one very big reason. And second, of course, you pointed about the expansion plan. So these are two major reasons apart from the price war in the near term, which has kind of delayed the profitability plans.
No, that's the point taken. But just to press on the point, if there are only 3 players, and that's an argument I've heard from a couple of investors as well, that it's not sustainable because Zepto is also Zepto wants to IPO, and they do 2 rounds of fundraise recently, so it won't go on. But if you expand that circle, and as Surabhi said, if you include some of the e-com players as well, why won't they enter if this is a very fast-growing, sustainable, long road kind of market? I mean, those guys have got very deep pockets, so it's not just 3 players. Yeah. And we've seen price wars, running for years in those segments. Karan, go on.
Yeah, I'll come to that as well. So if you look at the e-commerce business as well, e-commerce players have been in India since many years. I think the entire language right now, or the entire comment right now has changed from, growth to profitability. If you look at the growth, there's a convergence in growth in terms of e-commerce companies from, 40-50% to 15-20%. 2 reasons. One is we are reasonably penetrated right now. And second, there's a very big focus on profitability. So which is why I'm saying that, beyond the point, I don't even see e-commerce companies, stretching in terms of hefty losses. And the kind of losses IndiaMART is making, the kind of losses Zepto is making, 1,500 crores, 200 crores on an annualized basis, these are not small numbers. And I don't foresee e-commerce companies getting so deep in terms of making losses. They would rather try to focus on their own e-commerce business and try to make that profitable.
All right. Karan, let's hope that is the case for the sake of a lot of the quick commerce investors, and it pans out that way. But thank you very much, Karan. I wish we had more time and we could sort of have gone on, but we'll invite you again for some more conversation around this very interesting topic. We'll take a break. We are back. We'll get you more snippets from our exclusive conversations. We're from Davos, Axis Bank's CEO Amitabh Chaudhary from the sidelines of that summit. Stay tuned.
Welcome back. So let's get you more voices from Davos. Amitabh Chaudhary, MD and CEO of Axis Bank, says if the regulator keeps a tight leash on lending, there is a possibility that slippages on unsecured side could slip towards the secured side. Speaking to Shireen on the sidelines of the Davos Summit, the World Economic Forum Summit, he added that he's hoping for a pickup in private capex. Take a look.
Speaking of the hard calls, do you believe you've taken the hard calls, or will you perhaps need to take more hard calls, which will then reflect in the numbers in the near term?
Axis Bank, we believe, has one of the most aggressive provisioning norms in the industry. So for us, on the unsecured side, which we provide for 100% within 90 days, that is not the norm followed by a lot of the banks, including some of the banks who are bigger than us. So in that sense, whatever is happening in our portfolio, we are recognizing and kind of provisioning it away very, very quickly. So yes, as things stabilize and as the stock continues to get better and better, you will see the growth come back. You will see, obviously, the elevated slippages come down. It's the next quarter, the quarter after that, well, only time will tell. But we are quite confident that with the kind of book we write, the kind of underwriting we do, the kind of customers we have, it should not be a long-term phenomenon. But yes, we also have to be cognizant of the fact that if the regulator continues to keep a tight leash on lending in general, there is a possibility that some of this slippages you're seeing on the unsecured side could flow on the secured side, because they're all linked. And we have to be watchful of that. I mean, I don't think we should be just gung-ho for the sake of being gung-ho. We need to be watchful.
No, you just talked about the transference of unsecured to secured on the slippages side. Slippages have also been at a 13-quarter high for you. So, it's not a 1 or 2 quarter phenomena. So, do you anticipate things getting worse before they start to get better?
No, I think it's already stabilized. If you look at our numbers, the numbers are already stabilizing. See, we've gone through a period where the credit costs in India were at a historical low. And we talked about the fact that this will stabilize. So I think you're going through a cycle, a little bit of stability. You've also seen the Indian consumer over-leveraging themselves in some case quite rapidly. So I think that also is getting normalized as we move forward. And obviously there have been some macroeconomic or macro measures being taken by the RBI in terms of controlling some of this unbridled growth. So I think all these factors have played. It's a high after a certain period of time. We are still way below our long-term averages. We believe we'll be at the below our long-term averages, and quite confident about that because we know what we're underwriting.
But what about private capex, Amitabh? What's the sense that you get on that front at this point in time? You said you're bullish about the India story, but in the near term, what does it look like?
Well, till now, it is basically the government which has been supporting the capex story, and the private capex is still quite slow. I think it still will take some time to come back. We are hopeful that the private capex should pick up because you are seeing some sectors of the economy where investments are seriously taking off, real estate being one example. I mean, manufacturing, we're seeing some investment, but it has been slow. And when you go and talk to the promoters, they are saying that I will be careful about where I invest. I'm not going to do just these large projects for the sake of doing it. I need to be careful. I need to be watchful. I don't want to over leverage. We have learned the lessons of the past. And so, and by the way, we also need to realize that the corporate profitability has gone up. So there's a lot of cash flow being generated by the companies, and they're obviously using that cash flow to invest rather than kind of borrowing from the system. Yeah. So private capex hopefully will pick up, but we've been talking about this story for at least last 12 to 18 months, and we keep saying the same thing every quarter. But this time, I think the tailwinds look slightly better. I think government also realizes that because they have kind of reached the capacity in terms of what they can invest. So if private capex does not pick up, I think it will start becoming a bit of a problem.
All right, well, time to slip into a quick break. We'll come back. We'll get the pre-opening, and our technical experts will be back with us as well. Mitesh and Sudarshan waiting for you on the other side.
Welcome back. Gearing up for the market open in about 16 to 17 minutes from now. Like we've been saying, cues across Asia are positive, barring the Chinese markets. And the implied open is suggesting that after yesterday's massive slam dunk, the bulls could at least start, with a bit of a recovery this morning. So let's straight away take it to our technical experts. We have Mitesh as well as Sudarshan joining in. Gentlemen, good morning. So it's been, tough going for anyone who's tried to play a long trade in this market. But let's see. Let's find out if you are looking at at least a short-term recovery. Mitesh, would you look at playing long, or would you be shorting any bounce that we see today?
Good morning, Sylvie. Yesterday there was a good time to sell, when we kind of failed once again at 23,350. Shorting at 23,100, 120 levels may not be a very attractive proposition. I think while we did close below 23,100 yesterday, in case you can capture that area again, I think it will just be a range of 250, 300 points between 23,100 to about 23,350, and shorting should be done around the higher end of the range. So for the timing, I think on the index trade, we suggested, for advising to book profits if you have been carrying short positions, but long is something which I would totally avoid. I don't think there is any significant reversal sign on the chart. So wait for this bounce back to play out properly. In case we get a signal of continuation on the downside, we go short. Otherwise, we wait for 23,350 kind of zone to take short positions.
Okay, all right. Gentlemen, good morning. Thanks very much for joining us as always. Sudarshan, what about you? What would you do?
Yeah, good morning. See, when the markets were going up and we were making new highs, the idea was that new highs should be bought into. Now the exact reverse is happening. Again, yesterday we made a new 7-month low. Unfortunately, when new lows are being made, we cannot go long. We had an opportunity yesterday that fell apart when the Nifty broke below 23,200. So now, at the point when we have 7-month lows, there is no buying opportunity. The market must pause, must build a base, must move sideways. There are so many musts before we can think of buying. There's no sense in trying to capture, a sudden up move. It won't work out. So my view for the Nifty is just stay apart, step aside, focus on stocks.
Okay, all right. Let's focus on stocks then. Sudarshan, you go first. Tell us what's on your radar.
Well, there are buying opportunities because some stocks are bottoming out, even if the Nifty is not. AU Bank is a buy with a stop under 595. HCL Tech, which has been outperforming, is a buying opportunity with a stop under 1790. Hind Petro is a buying opportunity again with a stop under 362. And there is one intraday short, that is CESC. CESC can be considered for selling, the stop above 153.
And Mitesh, what about you? What would your trades be?
I have more of buy calls. Badani Green is a buy with a stop at 1,022 for targets of 1,090. A buy on Berger Paints with a stop at 468 for targets of 490. And Kotak Bank, disclaimer, I have some minor quantity in my portfolio, so there's vested interest. But Kotak Bank, from a trading point of view, is a buy as well. Keep a stop at 1879, look for targets of 1940. And one sell call, that's Coforge, around 83.40.50. Try to get into short side positions with a stop above 84.75 for targets of 8,100.
All right, gentlemen, we'll leave it there for now, but come back with more sort of questions and trades as we go along. Well, 80 points on the Nifty in the pre-open and about 740. Well, I think that should correct a little bit, but it's a higher start, about 1/3% higher start. I think we'll have the dollar rupee as well, so maybe just to first look at that before we go any further. Because there, nothing yet, 86.58, maybe a minute more and we'll have the first rates coming through. Well, Mr. Sajan Jindal of the JSW Group has made a pitch for safeguard duties to protect the domestic steel industry. In a conversation with my colleague Shireen at Davos, he said he expects some announcements from the government in the next 15 days. He added that a new EV from the JSW stable under the JSW brand would be launched in the next 18 months. Listen in.
What you're picking up from the CEOs that you're talking to in terms of what the outlook for 2025 looks like, what's global demand likely to be?
I think we are having this Davos meet just when Trump is taking all the limelight.
I know, in the shadow of the Trump inauguration.
Inauguration, that's right. So I think there is a lot of question marks on what's going to happen to the US, what Trump is going to do, and that will really define how the whole world order will happen. Last time around, Trump had put in a lot of import duties, and for him, it's America first. Yes. So I think the concept of the WTO, GATT, is all thrown out of the window, and there's nothing like that. So I hope, and also the European Union is also looking the similar way, right? So therefore, I think it's time that we in India start to think accordingly.
Okay, well, just on the US, since President Trump has promised to make America great again for the second time around, as well as once more make in America, you have a plant there in the US, so it might actually benefit you.
Yeah, but that's a very small capacity. There is a plant, and we had invested in that plant because looking at that US will have to block all the imports coming in from outside the US. And knowing that, so we invested in that plant. So for that particular plant, it's good news. But whether for the world it's a good news, I'm not sure.
No, absolutely. Of course, there is uncertainty on how those tariffs are going to work out. But speaking of tariffs, industry had asked the Indian government for protection by way of safeguard duties, anti-dumping duties. I believe that the work has started on the possibility of putting in safeguard duties. Have you heard back from the government?
We haven't yet, but there's a lot of work going on because it's not a simple process. They have to follow the due process, and that's going on. And we expect that over the next 10 to 15 days, we should hear something back from the government.
In the next 10 to 15 days. But, you know, in terms of demand at this point in time, because the outlook certainly seems to be that global growth will be stable, albeit uncertain, but stable at 3.3%. That's the IMF outlook. Right. What's global demand for steel looking like?
So, no, globally demand for steel is also quite okay. It's not bad, but Indian demand is very strong. And on the back of the investment by the government in the infrastructure sector and other areas, the demand for steel is strong in India, which is good news. So we are growing at about 10-12% steel consumption in India. So that's going well. And except that today China is dumping either directly or indirectly through the FTA countries. That's the only concern that we have. Once that is taken care, the industry should be in good stead.
Well, speaking of China, let's talk about your electric mobility plans. And you showcased your car at the Bharat Mobility a couple of days ago. So, you know, the possibility of you tying up with a global partner and possibly a Chinese partner at that, outside of course, the existing partnership with MG.
No, so I'm very bullish about the electric mobility and India, given that it's a large country with large demand for the cars and our over-dependence on imported fuel. In my view, electric cars make a lot of sense for India. So therefore, wherever technology lies, we will tie up with them to bring the technology to India and then very quickly localize it for the Indian market. That's the basic philosophy that I'm working with, and I'm quite sure that we will achieve that kind of goal. We are already scouting around the world for the technology, and China plays a very important role in electric mobility because they have much more head start over the other parts of the world, because most of the other part of the world, like Japan or Germany, Europe, they have their focus was on hydrogen mobility. Whereas China went for electric with battery, and they have moved ahead, and battery has really come of age on technology. So therefore, that for the cars, this battery technology is pretty good, and so therefore we are working on that.
So how soon before we actually see an announcement coming in on this front?
Announcement, I'm not sure, but we are already working on that project, and hopefully over the next 18 months we will see a new product coming from the JSW saddle under the brand name of JSW.
Okay, so JSW will continue to be the brand that you will use as far as the electric vehicles are concerned as well?
Absolutely, yes.
Okay, and in 18 months we'll have the cars on the road?
Hopefully, yeah, that's what we are gunning for.
Okay, all right. So the big news coming in from there is expect to hear something with regard to protection for the steel industry in the next couple of weeks or so. That's the word coming from Mr. Sajjan Jindal. So we'll keep an eye out on that piece of news. And also the JSW electric vehicles will be on the roads very, very soon. But let's get straight to another exclusive from Davos. Paytm CEO Vijay Shekhar Sharma has expressed his optimism over achieving EBITDA profitability in the next quarter. On the sidelines of the World Economic Forum Summit, Sharma said that the company's drop in market share is easily recoverable. Let's hear him out.
Well, the road ahead looks like that we have committed that next quarter we will be profitable, EBITDA before ESOP, meaning before the ESOP cost, which is also reducing incidentally, and we should be doing that. So we are working on the business which is now PAT profitable onwards. So after a couple of quarters, we should talk about PAT profitability, and I would go for that.
After a couple of quarters, so what does a couple of quarters mean? A
couple of quarters are a couple of quarters.
So you won't specify, is that 3, 4?
I learned that being a public company, one thing that you should know is that you should not have one information arbitration with other information. So what we've been talking, I'll be able to detail it further, just like we've said it.
Okay.
And we've said it that from this point onward, we in earning call also talked about that because our large cash pool gives us interest income, our two costs, which are capex sort of and lots of, let's say, other costs, will get sorted out. So we should head towards a PAT profitability soon.
In few quarters is what you have to say.
I have to say that.
So let's talk about what's happening on the UPI side of the market, Vijay. And you know, despite the fact that you've got the NPCI approval, we've actually seen market share come off quite sharply. A 50% drop as far as your market share is concerned, now down to 5.5%. Why is that?
It's very bad, and I can only say that. I mean, the situations and the reasons are public. I'd not like to repeat much of that, but I'd say that...
is it on account of the trust issues related to what happened with the bank?
No, we were not allowed to onboard at all for last...
So
our business was paused because of regulatory understanding and something that happened thereof. And post that it has come, I'm very happy that without any marketing spend, we are adding millions of customers. So I have a super brighter side ahead, just like this bright sun in Davos right now. We all are surprised, And I can say that even though we've fall market share exists, but it is easily recoverable with the product.
How do you ensure that it becomes easily recoverable? What are you going to do?
I think the customers are coming in. It's a product gap. Deeper integration to UPI ecosystem and more merchant acquisition, which creates a flywheel, will bring our consumer back. We do have a marketing budget, but right now we are focused on product-led growth.
All right, that is Paytm. We are just about 5 minutes away from market opening. The pre-open has settled, and it's a 74-point gain for the Nifty. At least at this point in time, it's looking good. But watch for some of the result reactions on stocks like IndiaMART, Cyient, DLM. They could be pretty severe wherever earnings have missed. The market has absolutely no room for error. But let's quickly, those are the stocks. Look at IndiaMART, could be the casualty of the morning, down 8.5%. Let's quickly move to our technical experts for some final calls. Sudarshan, 910. So what's the stock you'll go with?
I'll go with AU Bank. Consider buying AU Bank with a stop under 595.
Okay. And Mitesh, what about you?
I'll go with the buy on Berger Paints for targets of 49.
All right, gentlemen, got that. So those are the two calls. I'm just quickly glancing through some of the, the Nifty constituents to see what's leading to this up move or what's likely to lead to this up move. In general, there's a bit of an upward bid on financials, BFSI, banks and non-banks. So HDFC Life, Bajaj Finance, Axis Bank, these are some of the names on the upside. Then you have an M&M, a Sun Pharma. So it's fairly mixed, cutting across various sectoral lines. Broad-based recovery is perhaps what the bulls are, hoping for as we kickstart the trade.
Maybe I can sort of request my producer to just give me 30 seconds more to highlight some of these names. Put up MCX if we can, and we'll talk more about MCX with the brokerage call, etc. in a bit from now. It was a big loser yesterday. This about 1% higher. Dixon was a big, so it got smashed yesterday, 13%. Maybe quick look at that one. But it was actually not just Dixon. There was, Amber, which was sharply down, Sirma, PG Electroplast. That entire EMS space got completely smacked around. And of course, look at Zomato and Swiggy as well, which were sharp losers in trade yesterday. I mean, just first looks at where they are starting. So Zomato is down another 3.5 in the pre-open, and Swiggy is absolutely flat. Just Kalyan and Trent, if you can pull those up as well. Trent was the big loser on the Nifty. And of course, Kalyan completely reversed from Monday's 6% pop got sold into yesterday. So flattish kind of start. So these are all kind of hot spots, or hot stocks, if you want to call it. And we'll track them at open. 3 minutes to go for the market start. Well, let's just quickly play out some sound bites from the HCL Tech top brass. Roshni Nadar, the chairperson of HCL Tech, says she expects to see more federal level opportunities in the US in the Trump administration. This is straight from Davos.
I think there was a certain element of unpredictability in 2024, and I think there were lots of customers, clients and companies waiting to see what unfolds. There were, I think, more than 60 countries going into elections,
yes.
Right, culminating with the US, and I think that now it's back to business and back to strategy and implementation. So we expect 2025 to be better.
The feedback that you're getting in terms of the Trump administration's policy changes, deregulation is one of the big promises being made. Do you see that as an opportunity where, companies like yours are likely to benefit from this move towards deregulation?
Absolutely, and the opportunities that we could get in public sector. And I think there have been some American companies which have been much stronger in that sector. But as they look at optimization across all verticals, I think there is an opportunity for us as well.
But that's an interesting aspect that you brought out about the public sector opportunity that could potentially open up under the Trump administration. Has there been any indication of what it could potentially mean or lead to?
So I think there's already opportunities which are much more state specific, but I was referring more to federal, and that obviously has to be seen because they've come the DOGE, the Department of Government Efficiency, and we're hoping that we will be able to tap into some of those opportunities. Of course, has to be seen what it is, but on a state level there are certainly opportunities. At a federal level, it would be good to see what we can.
Okay, well, just sort of counting down to the market open in just a bit from now, and we'll have the first rate starting to appear on your screens. So lots to track, and the market indicating a 75-point higher start, at least in the pre-open session. That's about 1/3% at this point in time. What do we have? We'll do indices and we'll get into stocks. First rates anytime now on the big indices. It's higher. The question is whether we will hold on to some of these levels. So 23,080 is where we are at, about 1/4% higher. And the Nifty Bank is starting about 0.15 up, 48,666. The sensex is starting about 260 points in the green. The IT index is up about 0.6%. 780 stocks are higher and about 430 stocks are lower. So that is the advances to decline ratio. We've got 39 odd names in the green and about 11 stocks which are starting in the red at this point. So that's the Nifty heat map. It's a positive start, and I think I should emphasize it's the start. So we'll see where we go. Survi.
Absolutely, and the positive start is more or less taking everybody along. But look at the mid-cap index. I already see a flash of red on the mid-cap screen so early on. Anyway, sticking to the large caps for now. Sun Pharma 1.5% higher, Shriram Finance 1.5% higher, Reddy's is up about 1%. There's a bit of tech in the mix. You've got Infosys, Wipro, TCS, all these stocks are up and about. Tech Mahindra is up about 0.5%. So tech is looking okay. Bank Nifty is absolutely flat. HDFC Bank 0.3% or so. Let's see what the other big banks are doing. ICICI Bank is totally flat. SBI is actually slightly lower, about 0.5% lower. So Bank Nifty not in the mood today. What else is leading the up move? There's some consumer and auto. So Maruti, Bajaj Auto, these are names on the upside. There's HUL, Tata Consumer, ITC. These are the names on the upside. But the gain has already now reduced to about 60 points. Let's see. Holding onto these gains is going to be critical. On the downside, there are a couple of PSU names like BEL, BPCL is weak. There's Tata Steel, which is on the weaker side as well. ONGC. The commentary that we've got from Mr. Jindal, the next 15 days, there could be some news on safeguard duties. It's not firing up the stocks just as yet. Still lower for most of the steel majors. Nigel.
Well, you got the accident of the morning. That's IndiaMART. Stock is down close to 10% as we speak. So big downtick is what we're seeing. Zomato and Swiggy continue to see selling pressure. So the stocks of the one-day year, so to call it, they in fact are lower. Zomato, Swiggy, IndiaMART, they all had a big re-rating in terms of their multiples, valuations as well, and now they're pulling back a little bit. Stocks that are doing well, Jana SFB, that one's up close to 7%. That's the start of the morning, flying away as we speak. So big up move is what we're seeing on that particular name. I think Newland Laboratories as well, they're talking about a new capex, so I think the street likes that. So that's another big mover this morning. And also the point that we made earlier on Dalmia Bharat, that the numbers were weak. However, valuation support and the other factors, management is sounding optimistic about the journey from here on. So that's why after having numbers like that and you have more than a 10% miss on the EBITDA estimates, the stock is down only around 1% or thereabouts. ICICI Prudential, that's the other one that's taking it on the chin, down 6.5%. And Kalyan Jewellers, the one we spotted yesterday as well, Increased pledge from the promoter. The street is a little bit nervous. Promoters' hands are tied till the results come out. So we'll have to see what happens post then. For the time being, the stock under immense pressure.
You know, you mentioned, Nigel, accident of the morning. I don't know if you mentioned Cyient or not, because there's a competition between accident of the morning between IndiaMART and look at Cyient DLM. It's 11% lower. Margins are down almost 300 basis points. The profit fell about 40%. Look at the drubbing the stock is getting now.
Actually, there are lots of these names, right? I mean, another, I don't want to call it tax, maybe it is an accident. ICICI Pru, 7% cut. Yeah. That's a large name coming through. Stocks under 600 rupees. So it's not a good look for broader markets. I mean, already you got some 2.5, 3:1 in terms of declines to advances, straight out of the gate, and lots of volumes on the downside. I mean, I think I had to mention that as well. So ICICI Pru is down 6.5%, of course, results reaction. Look at Vari Energy is down 5%, so coming up with large volumes. Persistent is down another 3.5%. Again, these are all top traded names. Kalyan is down another almost 4%, 470 now on Kalyan. So there was that one blip on Monday when the stock ended higher. It reversed yesterday and continues to head south. Dixon was the big casualty yesterday. It's down another 3% this morning. So, you know, just under the 15,000 rupee mark now. 14,740 is where Dixon is at. It's got 100,000 shares. IndiaMART we mentioned, and I think Zomato we mentioned as well. Zomato is now a green candle, but the low has been made at about just under 204 for the day. It's jumped about 6 rupees from the lows, but we'll see what it's able to do. Swiggy is down at about 430, 2% lower. You know, yesterday another area which got smacked around is all real estate names. Lodha was down sharply. Oberoi was down sharply. So Oberoi is starting another 5.5% lower. That is Oberoi Realty. We should look at Lodha as well. You know, a bunch of other names there which are starting. Policy Bazaar down about 3%. Again, large volumes down at about 1,600 rupees. Newgen ended 15% lower after results yesterday. It's down another 7%. I mean, so, you know, it's if you want to look at what's down on volumes, it's really rich pickings right now in terms of what's going on out there. On the upside, I mean, I think we mentioned Jana, which is up, but that's about it. Reddington was up yesterday. It's up another 4%. Otherwise, it's all small. 1.5%, 2%. I can spot a Shakti Pumps, which is up about 3.5%. But that's it. Otherwise, it's all very small at this point in time. So
but let's be optimistic. The large cap screen is still holding on. When we started, there was this big fear because we were dipping from 70 to just a 40, 30 point gain. But now at least large caps, 90 points up.
Absolutely. And as well as, you know, hopefully, just a hope that maybe a market starts to stabilize a little bit around the lows that we made, which was just slightly below last week's low. Tahir Badshah is Chief Investment Officer at Invesco Mutual Fund, and he's going to tell us if the market will do that or not. Tahir, good morning. Great to have you with us here. Appreciate your time. Prashant this side. So, you know, if you look at the NSE 500, right, I mean, the primary concern has been valuations. I think till about a week ago, the median price to earnings ratio for NSE 500 stocks was about 45. Many stocks high P stocks have corrected especially, but the problem is they were very high, now they are just maybe high. So where does it leave us, Tahir? You know, and it's kind of a tough one because it's essentially been almost, it's not new, right? These high valuations. We've had high valuations for a decade now, relative to history in that sense. So what's the new normal in that sense and where should we settle? Your thoughts, Tahir?
Well, I think you know, some of these obviously were somewhat a lot more extended compared to what even their own strong fundamentals would probably justify. And I think that part of the correction is essentially set in, and we've seen the impact of that over the last some time. I think it's also a consequence of the developments in the last some time, basically with regard to the narrative. Overall narrative has actually come as a significant negative surprise and affected the valuations of many of these companies. I think at one level, you know, my sense is that we have somewhat turned significantly, you know, risk averse from an economic standpoint. In various ways, we've deleveraged to a substantial degree, whether you look at it in the form of either a fiscal deficit or probably you look at it in the form of interest rates, liquidity, you know, even regulation for that matter. I think in various ways, we are at that extreme, and I think we need to loosen up a little bit because in doing all this, I think we're losing the plot as far as growth is concerned. And that is what is essentially creating this impact, because the confidence in growth is somehow, lessened in the course of the last 2 odd quarters. So I think that is something which needs to, the overall, market backdrop essentially needs to be rectified in order for some of these, valuations to hold up. But I think some of these franchises which have seen this decline, they are also at the same time pretty dominant in their own way. They have executed very well in the last some time. And therefore, in few of these which we also own, we are keeping our faith. We know that they are in a position to grow at least ahead of system rate of growth, well ahead of system rate of growth, if not in those very strong growth rates that they probably witnessed in the last 3-4 years. So I think some of these franchises at lower valuations or at more reasonable valuations compared to earlier would definitely start looking interesting.
Tahir, hi. So I know you won't name stocks, but which are those pockets where you're not letting the price destruction sort of, change your stance or your thesis? I mean, I just want to throw in names of what we've seen in the last, I think, 24 hours. One is this entire quick commerce space, right? Where there's a raging debate on whether in the short term, at least, there's a complete lid on profitability and margins. The other space yesterday was EMS. I mean, look what happened. Dixon came out with pretty decent looking numbers, and we know their business, we know their margin profile, but the stock sold off as if there's some major calamity happening. So just, talk us through these two pockets at least.
So, both these pockets still look interesting to us. We believe that these are the pockets, like as I said, which will still demonstrate growth, which is well ahead of system rate of growth. But obviously, there was an excessiveness as far as valuations concerned. We were aware of that, and we've still continued to hold some of these names simply because of the fact that the pathway to growth and the visibility as far as longer term growth is concerned is still much higher in some of these names and some of these parts of the market. So I think yesterday for some of these names, or maybe over the last some time for some of these names to actually have declined, like as I said, is more a function of the backdrop. If the same set of numbers were probably reported by some of these companies 6 months back when the overall backdrop was relatively better, I don't think the impact would have been as high. But I think we've got challenged in terms of the outlook as far as overall growth is concerned. I think we are obviously affected by some of the developments from a global standpoint. We don't really have a full handle in terms of what the implications of some of these global policies, the way they are likely to turn, is going to either benefit or probably not benefit India. So I think that's where the problem lies. So I think it's nice that some of these names once again are probably likely to get into a relatively more reasonable zone. If these are enterprises which over a longer period of time are going to hold on well to their return on capital employed or return on equity, I think some of those valuations at least will form the lower end of their lifetime valuation bands, I would say. So that we have seen it in many of the other franchises, whether it is in consumer stocks or FMCG names, etc. And I think some of the same, much of the same thing is probably likely to happen in some of these businesses as well. Let's say, digital commerce, or probably you're talking about even capital market related entities. These are do have a lot of long-term structural drivers for themselves, and I think those will definitely support their valuations at a certain level.
Hi Tahir, good morning. One space which you liked was the power sector, and various ways of playing it, transformers, other companies as well. Some of them have come off considerably. Do you continue to hold that positive view? Stocks like Siemens also. Siemens has corrected, I think, more than 25% from its peak. Maybe valuations went out of whack. But there are very other pockets that have a longer runway. However, valuations seem to have got a little bit frothy. Your take?
So we are maintaining our confidence, Nigel, in many of these names as well, in these parts of the market too. But we also have to understand that some of these things are hostage to government policies and government spends, public expenditure, and so on and so forth. And we need that overall narrative to actually continue to provide that essential backdrop. But I think some of these entities have their own journey as well, because they are better configured, they are well positioned from the point of view of relevance in the overall scheme of things, their product lines, etc., the ability to participate in the change. So I think we have to, all these things do require a little more of patience. Obviously, we are coming from a situation where many of these stocks have done exceedingly well. So a 10-15% odd correction where valuations probably turn a little more reasonable is not something which is not par for course. I think we just have to kind of wait through.
Okay. So we've discussed, some of the sectors where you still remain optimistic. Tahir, the other question in front of the market now is that whether there's any point in going back to the old favorites, PSU stocks, capex plays, whether it's PSU or private sector, or whether that kind of, whole trade is over and done, at least for now. We are moving to the budget. It's anyone's guess whether the government really picks up on spending again or not. But how are you positioned on the capex side of the market?
So I think we have, at one level, I would say over the last 6-8 months, somewhat reduced our exposure. I wouldn't say a good lot, but we have moderated some part of it. I've told this earlier as well, that we've tried to diversify to whatever extent possible, keeping in mind that we also need growth. I mean, we can't necessarily get into pockets which do not necessarily provide that minimum growth requirement. I think it is better to target growth which is a little ahead of system rate of growth, even if we have to pay a little higher valuations than compared to looking at something which is probably well below that, and yet not as cheap either. So I think that we maintain, but we have tried to ensure diversity to whatever extent possible. So that's how we are basically treating it from an approach perspective.
The EMS companies, right, which you said, what should one pay for these companies? Yeah, how much on a PE basis you think? So 25 for some of these companies was very, very strong, 25 over 24. But growth rates will now settle down a little bit, right? I mean, still very high, 30-40% in some cases. I mean, on a PE basis, what are you willing to pay, Tahir?
So Prashant, if you look at it, some of these EMS kind of companies have not necessarily slipped yet on their growth deliverable. I don't think we have the moderation that we've seen in their valuations is a function of the fact that the results have not turned out to be in line with expectations. Perhaps they are in fact on an aggregate basis better than expectations as well. And I think at some level a few of these are also trying to increase their TAM, for which probably the market is a little nervous in the short run, given the fact that it will lead to perhaps fundraise, it will lead to perhaps a little more leverage on the balance sheets if at all, and may depress return ratios in the short term interim. So I think that is, once again, as investors, if these are companies, like as I said, which can grow well ahead of system rate of growth, and I'm talking about even on a moderated basis, they might perhaps be able to grow at twice the rate of the system. So I think at the minimum. So I think if that is the case, then they will merit significantly higher valuations. Hard to put a number because there are good number of other factors which also play a role from an environment standpoint. So, but I would like to think that these will command valuations which will be much stronger than what the rest of the market would probably do.
Okay, all right. Thanks a lot, Tahir, for joining in and giving us a view on the markets. Looking forward to chatting up with you in the coming weeks. By the way, the markets, the headline index is holding with a gain of 70-80 points out. The problem is in the breadth of the market. A lot of selling pressure is what we're seeing. And just one stock that's doing well, Jana Small Finance Bank, just take a look at that. That's the green part of the market. Very, very good set of numbers. Street appreciating that. Let's focus on another set. KEI Industries reported a mixed set of numbers. Cables and wires, they led the growth. Solid one out there, but margins contracted a little bit. What's the way ahead? We're joined by Mr. Anil Gupta, the Chairman and Managing Director of the company. Hi, Mr. Gupta. Good morning. Let's address both these two aspects. First, your cables and wires business. If I take a look at your revenue growth, though the composition is very different from Havells, well, you seem to have done relatively better. So the first part is, have you gained market share, and what is the volume growth you'll be looking at in this segment? Point number one. And the second point is on the margins. Raw material costs have been fluctuating, and that's what's put pressure. Do you believe in quarter four onwards you get to that 11% odd margin that we were talking about earlier?
Thank you very much for inviting me to your show. Good morning. We have grown, in our wire and cable business by around 18 to 19% in turnover. Actually, it is 20%, but in volume around 17% we have grown. And so far as margin is concerned, a lot of fluctuations in the dollar and LME, both aluminium and copper, which led to little bit of contraction in the margin by 0.5%. But I'm sure that it will normalize in the full year. In the next quarter, when we see the 12-month results, it will be near to the target what we had projected in the beginning of this year. And in the volumes also, we will try to maintain our growth sequentially in the same manner.
All right, Mr. Gupta, a couple of questions then on this aspect. The way you calculate and, some on the street calculate is a little different. So I just wanted to confirm, Q4 margin improvement will be to the tune of around 50 basis points to 100 basis points in comparison to Q3. Should that be the understanding?
I expect the improvement by 0.5% in the Q4.
50 basis points. We'll hold you at that. What about on the market share front, sir? As you've said, you've grown at around 17%. What is driving this volume growth? It's the positive part of a number, so I ask you this. And have you gained market share? It appears so.
I don't know whether we have gained market share, but we have grown by focusing on current favorite projects like solar, like infrastructure, power transmission and distribution, and as well as exports. Truly speaking, in our wires and cables, we have increased our export by around 20%. The number looks little different because our EPC export sales, which was more than 150 crore last year due to our Gambia project, is almost zero this year because that project is nearing completion. So, but wire and cable business has grown substantially.
Mr. Gupta, hi, good morning, sir. So let's talk about volume projections for both for FY25 and also going forward, because you're undertaking major capex in Sanand, and I think you've also taken some more land in Gujarat. So take us through the expectations for FY25. What will be the total volume growth in your wire and cables business? And as some of these expansions come on stream, what should we expect in FY26?
We have maintained a guidance of around 16 to 17% in the volumes, and consequently the value increase will be related to the prices of raw materials. And we expect to maintain the same volume growth in the next financial year, what we are maintaining this year, because our Sanand project production of first phase should be coming by end of June. So the results will be visible only from second quarter. That too for the around 35 to 40% of the project.
But sir, you're saying 17% volume growth for FY25. Now with Sanand coming on stream, the first phase, again you're saying FY26 volume growth will also be around 17%. Should it not be higher because you're putting more capacity to work?
It may be higher, but I don't want to comment, too bullish at this moment, because projects always ramp up gradually. You can't expect that on the first day of production, we will achieve 90% of its capacity.
No, I was saying year as a whole, sir. FY26, the ramp up will happen over the entire course of the next financial year. So that's why I was asking, not for Q1 or something like that. Generally, FY26, what should volume growth be? Because overall capex will be coming on stream.
We expect a sales of 1,000 to 1,500 crore from Sanand next financial year in the remaining period of 9 months, because the production ramp up takes time. We need to take factory specific approvals from the customers, audits, etc. So that's why we are a little slow on giving the guidance from Sanand on a big volume. But FY27 will be very strong.
FY27 will be very strong. Mr. Gupta, good morning. Prashant here, and good to see you, sir. Now, in a couple of weeks, we'll have the union budget. There have been two problems last couple of years. Last year, maybe because of elections or whatever. Spending has been low in terms of what has been allocated. And allocation itself came off quite sharply. If you look at I'm talking about towards infrastructure sectors. After many years, a very strong allocation. How critical is state spending? Generally, it looks pretty robust out there. If you look at power transmission bids and other segments that you're involved in. But how critical is the government pushing the pedal in terms of allocations when the budget is presented this time?
I think the infrastructure spending is always very critical for our industry, because most of our product goes into the infra project, energy sector, and in renewable, where a lot of growth is coming up. But I think transmission lines, evacuation of power through the transmission lines is important, which is normally coming up now through the tariff-based competitive bidding. So we expect that this national transmission plan, electricity plan, which will bring some good investments in transmission sector also next year. And in whole energy segment, power generation, transmission, distribution, and the power consumption sectors like industry, infrastructure, and real estate, they will bring bullish trend in the wire and cable demand.
Okay. All right. Very quickly, sir, before we let you go, the EHV part of your business, so there, because of slow clearances, I think that's what was the big drag, and that's why there was a sharp degrowth in the past quarter. Have things stabilized?
Yeah, it is improving, and we expect a good numbers in this quarter. But we have utilized that capacity for our HT cable production, and you can see that in HT cable segment we have grown by 49%.
Got it.
All right, we'll leave it there, Mr. Gupta. We'll look forward to our next chat. Thank you very much for joining us and running us through some of that sort of commentary. So just under 4,000 rupees is where KEI is now trading at. It's been one of the huge big wealth creators, 10x in the last 5 years for KEI. We'll take a break. We are back, and we'll have the management of PNB Housing Finance joining in to talk about third quarter earnings and the outlook. Stay tuned.
Welcome back. As we speak, a few stocks are coming off their lows, so we're trying to look at some positives. IndiaMART, case in point, the stock has come off close to 5% from the low point of the day. But let's talk about another one that's getting a drubbing in early morning trade, ICICI Prudential. That's trading weak. Vamakshi joins us to analyze those numbers for us. Vamakshi.
Well, Nigel, when we look at the new business premium, that saw an uptick of 53.5% coming in at 6,441 crores. The total APE was also up nearly 27.8% at 2,438 crores. This is more or less in line with what the street was estimating. But the big hit is coming as far as the VNB margins is concerned, because that has come in much below what the street was anticipating. Now, keep in mind the VNB margins have contracted from 22.9% to 21.2%. And resultantly, there's a miss on the VNB front as well. VNB is up 18.6% at 517 crores. Now, there are a couple of brokerage notes that have come out with their take on the numbers. HSBC has a buy call. Target price has been cut from 825 to 780 rupees per share. Morgan Stanley is the next one. They have an equal weight call. Target price of 695. They too allude to the fact that VNB margin misses the company, the brokerage's estimates. They've gone ahead and trimmed their VNB forecast by 2% for FY25 and 27, considering the miss on margins. Macquarie has a neutral call, target price of 725. They say that Q3 FY25 VNB growth has disappointed yet again. A higher ULIP, declining savings, and higher costs have affected margins, and they see further downside to FY25 VNB estimates. So overall, doesn't look like a good picture for ICICI Pru.
It does not. And look at that stock sliding 8.5%. Thanks, Vamakshi, for reminding us once again about the reasons and the issues with those numbers. Q3 disappointment playing out on ICICI Prudential. The next company on our radar is PNB Housing, also on the back of results. And the stock has cooled off actually from the morning highs. It opened positive, but since then it's down about 4% from the peak. And overall, if you look at PNB Housing in line with the market correction, the stock is about 25% off the 52-week high itself. So what are the trends in the third quarter and what's the outlook? Well, let's take this up with Mr. Girish Kausgi, Managing Director and CEO at PNB Housing. Mr. Kausgi, always a pleasure having you on. So, I mean, year on year, the growth number looks okay, but sequentially, of course, one can argue that over Q2, Q3 disbursements are lower. But I want to start with the brighter spark in the numbers, and that's margins. Because you've actually managed to improve margins by a shade quarter on quarter. Even year on year, the margins are looking better. So what went into that? How is your cost of borrowing moving? And what can you guide for, considering the market is expecting rate cuts this year from the Reserve Bank?
Well, good morning, Surabhi. I think if you look at Q3, it was pretty good. If you look at the demand, mortgage industry is doing well. Demand is quite robust. But I think this year, Q1, Q2, Q3, there has been some challenge for the industry because of various reasons. And Q3, the challenge was much more. But if you see PNB Housing, Q1, Q2, Q3, all the 3 quarters we have done pretty well. Well, if you compare with Q2, I think disbursement is slightly up. The book has grown by 4% on retail. So I think Q3 is pretty good. There's an income growth of 11%, net interest income growth of 17%, PAT growth of 43%. If you look at NIM, it is quite stable. If you look at ROA, it is 2.51. I think on all the metrics, we have done pretty well. Talking about margin, our guidance is 3.5%. So we will be able to maintain around the current levels, let's say about 3.6 to 3.65 in that range. Our cost of borrowing now is 7.83, a notch lower than what it was in the previous quarter, 1 bp lower. So we've been able to manage a cost and slightly increase the yield. Yield now is 10.12. So I think overall it's a pretty good quarter, because you will see some of the companies in this quarter showing YOY decline in disbursement. That's because of certain challenges, nothing to do with the demand.
So you're saying that even if we get into a rate cut cycle, you will maintain margins at around 3.6, 3.7%, right?
Yeah, that's right. I think we are expecting a rate cut of about 25 bips. That will have an impact of 10 bips on the cost of borrowing. We'll be able to pass on that. I will be able to maintain margin around, guidance is 3.5. We'll be definitely much above that. And also, if you look at the growth guidance for this year on retail was 17%. We are at 17.5%. So we have already kind of, ahead in terms of our achievement, both in terms of book and disbursement. So I think
So just coming on disbursements in a second to complete that margin, answer. What you're saying is 3.6%, but for FY25, to be fair, I mean, it will be better if you give us some sense of what happens as we get into FY26, because the rate cuts, might continue for the rest of the year. So will you be able to hold margins at 3.6%, even say in the first half of the new fiscal?
See, about next 2 to 3 quarters, we'll be able to maintain around that level. And after that, the margin will slightly start improving for 3 reasons. One, we are changing segments. We are growing our prime book slower compared to emerging and affordable. Affordable now the book is 3,838 crores. We have actually doubled affordable book in last 9 months. So we are increasing affordable, we are increasing the growth in emerging and lowering the pace of growth in prime. So this is one. We are moving segments, and also we are increasing yield in all the 3 segments, whether it is prime, emerging or affordable, number 1. Number 2, we'll be starting corporate, so that will add to the margins, and therefore because of these reasons we'll be able to hold.
Okay, hi Mr. Kowski, and good morning. Good to see you, Ben. The affordable book, in the past I think you've said you're looking to grow to around 5,000 crores odd. Any geographic targets you have out there?
No, we are actually present in 13 states. We will expand to 15. So for us, the contribution geographically, I think it is almost similar between South, North and West. South is slightly higher. I think that is more by design. And we have disbursed about 930 crores in Q3, and we should disburse a little over 1,200 crores in Q4. That will take us to a target of close to 5,000 crore book in affordable by March.
Okay. You mentioned corporate, sir, a new segment, and you said that will, of course, aid margins. Can you elaborate on that? Affordable, you've given us some targets, but what are you thinking with respect to the corporate segment?
I think corporate this year will be able to start. So I think coming year we should be looking at about 1,500 odd crores disbursement. So we don't have a big target on corporate. It will be very small in our overall portfolio. It will be always less than 10% at any given point in time.
And when you say corporate, this would be lending to exactly, what sort of entities?
So this will be lending to developers for largely construction purpose.
Okay, so there could be an element of construction financing coming in as well. So that brings us back to now the overall picture on AUM year on year. It's up 12% in the third quarter. FY25, what should be the AUM growth? And then FY26, I know it's a little early to ask this question, but since you're going to start this new segment and affordable is growing, what can shareholders look out for?
I think if you look at last almost 3 odd years, we are not selling any portfolio or the pool, and therefore I think more relevant for a discussion will be on the book growth, especially on retail. So retail this year, our guidance was 17%. We are already at 17.5. So we'll be able to surpass our guidance of 17% this year. And for next couple of years, we have detailed our growth between 17 to 18% on book, which will take us to 1 lakh crore of retail book by FY27. So that is what we've already, laid out. So we'll be able to continue with the trend.
That's on the retail side. And total AUM?
So as I mentioned to you, we are not actively selling any pool now. So today AUM is about close to 5,500. So that will run off over a period of time. The focus for us mainly is to grow our book. We want to grow our balance sheet. And in that context, we'll be more particular with respect to retail and corporate growth.
All right, Mr. Kowalski, very quickly, Quality Investment Holdings, that's the Carlyle Group. They have 30% stake, which has come down to around 10%. Any communication from them with regard to what they plan on doing with this 10%?
No, actually, we never engage on these things because Carlyle is an investor and they're on the board, and it is left to their decision. We generally don't get into investment decisions.
All right, because from a shareholder perspective, the street will be waiting by for this to get cleared out. And that could be one of the triggers for the re-rating. So we'll keep an eye out on that front. Appreciate you joining in, Mr. Kowalski. Thanks a lot for joining in and detailing the past quarter's numbers and the vision that you have going ahead as well. Well, it's time for our special segment, Quarter Se Quarter Tak, and where we bring you earnings expectations from every sector. Vinny joins us today to tell us about what she's expecting from the pharma sector. Vinny, over to you.
Good morning. So today, in terms of pharma sector and what we're expecting in Q3 FY25, the pace of profitability growth for pharma companies in Q3 is expected to be slower than the previous quarters. And this is the previous 2 quarters that we're talking about. Now, for Q3 FY25, analysts are expecting pharma companies to see sales growth of around 10 to 12%, EBITDA growth of around 13 to 15%, while profits are expected to see a growth of around 11 to 13% during this quarter, driven mainly by operational efficiencies, INR depreciation, I beg your pardon, as well as a reduction in freight costs. Now, in terms of the moderation and growth that we're seeing and the growth momentum compared to the previous quarters is expected primarily due to the pricing pressure and a high base effect that is coming in. Sales for pharma companies this quarter is expected to be supported by growth that one will see in domestic business, as well as US markets is also something that will support the growth. But India sales are likely to be the key driver during this quarter. And among the large players, Dr. Reddy's can see a very good growth of around 10% during this quarter, while in terms of India business that we're talking about, Sun Pharma is also expected to see a 9% growth on a year-on-year basis. Mid-sized companies, whether you're looking at JB Pharma, Torrent, and Mindgan Pharma, are expected to outperform with 11 to 13% growth, driven by chronic portfolios, while Cipla and Zydus on the other side are seen reporting a relatively weaker quarter this time. 6 to 8% YOY growth is what we're expecting, mainly impacted by supply issues as well as base effects coming into play for both these companies. Now, coming to closely watching out, and what is watched out is the US markets. The US generics are expected to see flattish growth due to the price erosion and lack of significant launches in the US market. 5% growth is what is projected overall in the US market for all these pharma companies, and that will be mainly because we'll be supporting the growth. What is it? The specialty business as well as scale-ups that will come in on that front. Moderation in terms of price erosion. That is a key factor to watch out for. And key product launches by some of these companies like generic Spiriva as well as generic Myobatric is something that is a key focus in the US market. In the US market, what we can also expect is Revlimid sales are now going to start becoming lower. So that will impact Dr. Reddy's, Aurobindo, Sun Pharma, Zydus, as well as Cipla versus sales booked in the previous quarter by these companies. Now, company-wise, when you look at it, Sun Pharma could grow in the range of somewhere around 8 to 10%, mainly led by the US specialty portfolio. Cipla and Zydus could see a decline in terms of growth sequentially in the range of 5 to 7% in the US business, mainly due to supply constraints. Dr. Reddy's growth will be supported by contribution that's coming in from the latest acquisition. This is the first quarter where we'll be combining this acquisition, so keep an eye out on that one. EBITDA expected to grow in the 15% range YOY for the pharma sector. Overall, on overall basis, it's expected to remain flat on a sequential basis. Cipla, Dr. Reddy's are likely to witness margin contraction, while Sun, Lupin, DVs are expected to witness strong margin expansion this time. Commentary will be key from pharma players that will remain in focus. From Biocon, especially, they have got the clearance coming in for 2 of the biologics plants, so keep an eye out on that. Dr. Reddy's in terms of timelines of approval for new product launches, or Aurobindo Pharma in terms of progress of breaking even in penicillin G is something that they'll watch out for, and capacity addition. And also in terms of Cipla, watch out for timelines in terms of recovery for some of their sales and products is going to be a key factor to watch out for. Now, overall, while Q3 is expected to be stable quarter for the pharma sector, the growth momentum has seen a bit of a slowdown, and companies with diverse portfolios, strong execution in the US, robust India's business sales are the companies that will outperform overall in the pharma sector. And before we leave you all with what is expected in pharma sector, let's look at the valuation also, because valuation is very interesting. That what we are watching out for. Most companies are trading above or around the 5-year average, so quite high in terms of valuation, Nigel, and that's what we'll keep an eye out on.
Thanks a lot for that, Vinny. Well, let's discuss this in further detail. We have Sumit Gupta, AVP Research at Centrum Broking, who joins us on the show. Hi, Sumit. Good to see you in after a while. Tell us, what is that company that can give a positive surprise for Q3, according to you?
Hi, thanks for having me. Good morning. Yeah, so like overall pharma space, we expect within our coverage universe, so we expect around 10 to 11% kind of growth led by good performance in Indian pharmaceutical market, as well as subdued performance in the US market. So US market continues to be led by niche launches, easing pricing pressure, and INR depreciation also leading to some bit of growth. However, if you see from company specific point of view, we expect Cipla's US sales to decline modestly by 3 to 4% due to supply side constraints in lenalidomide. However, this phenomenon is expected to be for this quarter. However, we expect from next quarter also it will normalize. However, if we expect Dr. Reddy's sales, so we expect that to grow at around 7 to 8%. So, and Sun Pharma's specialty portfolio continues to drive the overall US portfolio, and we expect around 15 to 16% kind of growth in the US segment for Sun Pharma also. Coming to the domestic market, we expect basically growth will be led by new launches or the in-licensed portfolio and the core brands. So on organic basis, we expect around 10 to 11% kind of growth. Let's say for JV Chemicals, we expect 11% kind of growth. However, with including the Ophthalmic portfolio, we expect 22 to 23% kind of growth. So this is the kind of growth that we are expecting for this quarter.
Okay, all right. In terms of commentary, as Vinny said, that's going to be essential. Give us a couple of those data points, company specific. What's the commentary you're looking at? If there's any particular trigger that you're looking forward to.
So let's say for US Cipla, so how the lenalidomide or the specific key launches are there, and what kind of timeline that we can expect over the next few months or the few quarters. Or let's say for JV Chemicals, how they are planning, how they are expecting, you can say, how they're expecting their particular launches to go forward from here on. So it's very company specific to very drug specific and from company to company. Sun Pharma specialty portfolio continues to do well. So it will be very company specific.
Sumit, hi, morning. You have coverage on Aurobindo? And if you do, no, you don't. Okay. Come off very sharply. It's basically back to previous lows of about 1150 or so from the recent high, about 10 days back, about 1350. So that is Aurobindo for you. Apart from that, we've had some fund managers we've spoken with talking to us, and this is beyond the third quarter. Maybe we'll hear some of it in commentary, etc. we've had in the past. Indian generic companies, pharma companies talking about the GLP-1 opportunity and how they plan to sort of go after it. Anything you expect to hear from any of the companies under coverage?
Yeah, this will be one of the key focus in the commentary for this quarter across the pharma space. So GLP-1 continues to be a good opportunity for the near to midterm. So we will see continued traction from analyst community for the asking the pharma space, and overall we will see positive commentary on this.
kind of commentary and from which players, and who is best placed according to you, Sumit?
So there are multiple players. So it's a multi-billion-dollar opportunity, and we see be it Reddy's, be it Cipla or some other companies. So there are various players which are coming.
Okay, all right. Various players which are coming. Just in terms of, we don't know whether this is really going to play out in what shape, form, etc. Do you expect, at least during campaigning, overhauling healthcare in the US was a big campaign promise, right? We've not heard anything on that front as of yet. Do you think, is that a question you get from investors at all, something to track? Or you think, it's really a non-event in that sense?
Yeah, nothing much on that side from the investor community as such. Basically, India, India's pricing is very attractive in the US market. So, I don't see much impact on the Indian pharmaceutical companies on the negative side. So I don't see any negative. On the contrary, it might be positive. So if there is anything which might come, and Indian pharmaceutical companies are very much positively placed in terms of pricing and in terms of volume share.
Okay, all right, Sumit, we'll leave it there. Thank you very much for joining us, and we'll speak to you once we start to get some of these numbers out from these pharma companies. Okay, I think the market, by the way, is still holding 80 points higher, 23,100. Mitesh is with us with what he'd want you to do this morning at 10 o'clock. Mitesh, what do you have?
So, Prashant, nothing much on the index. Seems like we'll go back to a choppy range. So we'll avoid the index for the timing. But on stock side, Wipro is something, which has caught my attention. Buy here with a stop at about 298. Look for a target of 318, 320 to begin with. Maybe eventually higher levels, but that is what I think the stock looks like poised to do. And the other stock on my list is a sell on IGL with a stop at about 396 for a target of around 365.
Okay, I got that. ICICI Pru is the big damage this morning, large cap stock which is selling off. Any levels here, Mitesh, ICICI Pru?
So ICICI Pru, I think, has had a gap down and then a big follow through on the negative side. I think the stock is heading towards 540, 535 zones. So there's still about 70% kind of a downside left.
Something like a Oberoi Realty, is it coming to some support levels? 1750 now after today's fall.
See, Oberoi had a big fall yesterday, and today I think there's some continuation. There is minor support around the levels of 1650, 55, but that is still about 100 points away from. I won't be venturing into Oberoi Realities.
Okay, all right. That's basically all the way back to September 24 levels. And if it does get to those 1600 kind of levels, but big fall last two sessions. Mitesh, thank you very much for joining us. Good speaking with you. On the other side, Manisha joins in with commodities and focus on. So stay with us.
Welcome back. So the mid-cap correction is continuing 1.5% down on the mid-cap index. Let's look at stocks which are really under pressure today. And IndiaMART is definitely one of them after the numbers came through. So let's go across to Rima to look at the fine print. Rima, so what went wrong?
Well, for starters, the stock today has now hit a fresh 52-week low. It's down 18% in the last 1 year and now more than 30% off from its 52-week high. Well, what went wrong? The quarterly paid subscribers. That's the key metric to track the business health of the company. And that saw a decline of 3,700 on a sequential basis. In the good days, the quarterly paid subscriber, quarterly addition used to be 5,000, 6,000. Then when things started getting tough, the business environment over the last couple of days, that quarterly addition came down to 1,500 to 2,000. But this decline seen in Q3 was unexpected and came in as a bit of a negative surprise. Now, the company has said this is on account of one, the company is focusing more on adding better quality, higher quality customers, and secondly, the holiday season in Q3. Nomura has downgraded IndiaMART to a reduce. The target price is slashed Earlier, it was 3,150. It's now down to 1,900. They're valuing the core business at 20 times. So even the valuation multiple has come down. Earlier, it was at 30 times. And now they're valuing IndiaMART at a 50% discount to InfoEdge's business. Motilal Oswal, on the other hand, continues to remain bullish in the stock. They have lowered the target price to 2,600, but they argue the valuations are undemanding. Back to you.
Okay, all right. Thank you very much, Rima, for that. That is the sort of big mover, continues to be the big mover on the screen. Well, shifting focus to commodities, Manisha is here with what she's got top of mind. Manisha, good morning.
Well, morning, and I'm looking at the crude oil prices because since the inauguration for the US president has happened, we've seen crude oil prices only go one way, and that has been on the lower side. Well, we started this year on a positive note because there were some supply concerns, but not anymore. To begin with, Trump has declared national energy emergency, and he's talked about three things, especially one, that the permissions or permits would be eased on. The second is opening up more acreage in sense of onshore and offshore drilling. And third, most importantly, is that there would be a reverse of clean energy policy. So that is what really seems to be putting pressure on the crude prices there. And then there is conversation about more tariffs as well. The US president has now reiterated that there are more tariffs coming in for China, nearly 10% of that. And then there are more tariffs also coming in on Mexico and Canada. This would happen on 1st of Feb. Markets also are looking at higher supply concerns. Well, you look at the US oil production, well, that is at all-time highs. Also, OPEC and allies, which is the other part of it, is looking at a spare capacity of nearly 5.8 million barrels per day. So there's that much crude available or spare capacity in the international markets. So less reason that you could be looking at a strong run-up in case of crude prices. But then there are some supportive factors as well. When you look at the US president, he's talked about probably stop buying in sense of crude from Venezuela. That would perhaps bring in some supply concerns because US does import a huge chunk from Venezuela. The second point is that the winter storm in Gulf is continued to raging on. So that demand also is something that's seen in the markets. And then the US will start to refill strategic reserve at a more stronger pace, would mean more pickup in sense of crude from the markets there. The US sanctions on Russia that we've seen recently already have disrupted the physical oil and the tanker market. So there is some near-term premium that we are seeing in various crude varieties coming in. The markets also are reacting to the Saudi Aramco statement that was in Davos yesterday, suggesting that they're expecting oil markets to be healthy. For 2024, the global oil demand stood at around 104.6 million barrels per day. Saudi Aramco's Nasir anticipates that you could be looking at a higher demand at around 106 million barrels per day for 2025.
Okay, all right, got it. Manisha, thank you very much for that. So that's commodities. Now we'll take a break on that note. Coming back on the other side, our special segment, Budget Countdown, coming up. Lata will be in conversation with Deo Shankar Tripathi of Aadhar Housing Finance and Mahesh Mishra of India Mortgage Guarantee Corporation on what the budget can do for the housing sector.